we're still in what I consider the last leg of a 43-year secular bull market. The leg really began back in that April swoon when we had Liberation Day, and it's been the S&P's up, I think, 46% since then. So since we talked in July, it's run further. It just keeps plugging away. I had somebody ask me today, because I've been saying we are in the parabolic, or probably are in the parabolic, and I think people see it kind of trade sideways for a week, and it's like that can't be a parabolic. And I go, you got to wait for this thing to finish. When you go back and look, you'll see the slope is steep, and it's basically we're in the final steepest leg of this long bull market. It's amazing. All the things you listed off are things that should trouble the market, and yet the market is basically at all-time highs and shows no signs of slowing down. Of course, you get a little backtracking. The semis got hit a little bit this week, and they seem to be starting to move up again. Industrials look good. The finance area, you've had some questions about credit, but I think that's more one-off things. They don't look systemic to me, and from what I've heard, it's more a fraud in a couple instances that hit a couple regional banks. So I think financials look good, industrials look good. I think even some of the consumer areas are going to start as rates come down here. I think you're going to see housing pick up a little bit. Not that it's off to the races for a long cycle, but for the next 2 or 3 months, you could see pretty good trades in consumer stocks, consumer discretionary areas. GM had a pretty good performance recently. So I think you are seeing across the board some broadening out in the market. Small caps have done very well in the last several months. They've outperformed S&P from last April, and I think they are heading much higher. So market looks good. You're going to have some backing and filling every once in a while as it gets ahead of itself. But frankly, my number in July, and I think we talked right after that, my number in July was 8,700, and then in my October letter, I raised my target again to 9,500 on the S&P. So from 87 to 9,500 in just a few months. That's how bullish I am. I raised my NASDAQ target to 32,000, raised my Dow target to 65,000 from 60, and raised my Russell target from I think it was 3,400 to 3,800. So I've gotten even more bullish. Been the biggest bull on the street, I guess, but it just looks to me like we've got legs here. I hear people worrying and concerned about, is our tariffs coming back on the worry wagon, or are we going to have problems in terms of Ukraine, et cetera? I just looks like steady as we go here, and more than steady, probably pretty sharp rally from here into the year end and maybe beyond.
When you think of the current market position, as you noted, there's a lot going on that could be interpreted as trouble, as things slowing down. I'm genuinely interested in your take on how the market behaves at points like this as compared to prior highs. My brain typically looks at it as we're definitely hovering around highs now. The market has hit new highs in previous periods, and I'm always curious, what were the conditions when we hit those highs? What did things look like? Very often, it does seem like conditions looked at least moderately better than they do now. There's a lot going for the market, especially through deregulation, technological advancements and stuff like AI. So there definitely are tailwinds for sure, big tailwinds. But then there's also some decent headwinds. How do you think the market is posting highs here? And do you think that it is Like, what do you think the primary driver is of it?
We're in a very strange period because in some ways you can look at this as almost the beginning of a cycle. Now we're at all-time highs, with huge runs. Certainly, we're up big from 3,500 in October of 2022, so we're approaching a double. And yet, I can look at the market and, in some ways, say because the Fed is beginning a new easing cycle, the street, and because the institutional investor fought this thing all the way up, they are now starting to warm up to the market. They missed almost a double in the market. Didn't miss it because they were in
Sure.
stocks, but they were skeptical of this thing all the way up, and they're getting more bullish here. That's an unusual situation. I mean, that's not where we normally would be at all-time highs, but we are. I mean, even the little sell-off we've had in the last week, particularly in the metals, but in the market too, somebody's took a step back, et cetera. Um, Even that caused the wall worry to climb again. The institutional investors just starting to kind of jump on the FOMO wagon and say, gee, we missed this, but it looks like it's going to run. And then all of a sudden you get a little weakness, not very much, but a couple percent, and they're right back to worrying again. So the sentiment is unusual because at all-time highs, you usually see the sentiment is way too bullish. And right now, it's still very skeptical, still very cautious. And we've got the Fed. I think it's pretty obvious the Fed is beginning. It wasn't a one-off rate cut. We're going to see several rate cuts in the months ahead. And in fact, Powell's even talked about the end of QT, the end of pulling money out. Um, so those things are typically things you see after a market sold off. You're at a bear market bottom or certainly a correction bottom, and you're getting the beginnings of a market. We're at all-time highs and far beyond what almost anybody saw coming except me. And so it's a very unusual time, but I think what you're going to see in the months ahead, meaning the next 2 or 3 months, certainly, and maybe a little longer, um, is a sentiment move towards the Fed is beginning a long easing cycle that could carry this market for a couple of years. And so I think that's what's going to pull a lot of people back in from the sidelines or get them to move from a defensive position to a more aggressive, stock position. Retail's been there since April. They've been really driving this. I think they'll continue to get on board. So it doesn't mean you're without risk. There's certainly risk in there, and certainly I think we are moving towards a global bust next year. So it's a really funny period where things look like they can run 30 or 40% upside in the market from here, and yet still have a situation where um, the the other side of the mountain isn't very far away.